All right. What a weird day. Today's been strange. So on the candle chart, what we're dealing with today. This is NQ. ES is a little bit easier to read today, but the rejection off the 11/3/26/25 was interesting. Um, but I wish I could say that I traded that better. We tried to long. We caught a long up here into the top, and then IB high had not been taken out yet. See that? And so we had the bright idea of trying to buy these dips, assuming that one of these is going to break the IB high, which is usually a good deal, right? Like it's usually right. And we got risk off and then stopped out, and then the second one set up, I think, in this candle somewhere. And then my coach and like the rest of the room took this at London close and got their stop back, and I skipped it. So it just goes to show, like I said so many times, that like you can have the perfect system, but if you don't have the confidence and the consistency to like take the trades when they show up, that it does not guarantee that you're going to make money. But it was kind of frustrating because I was trading my in my what's it called, cash account today. It may not have been the best day to choose to trade the cash account, but I tried to pick at least a couple days to trade in the cash account. Now that I've been doing the Apex, having like just a change of pace where like I don't have to, I don't know, like the strategies that you need to trade that trailing drawdown is different than what you can do with the cash account. And when I saw the setup this morning, when it was going like straight up, basically, I was thinking, okay, it's probably a trend day. We're just gonna like, I got a piece of it. Thought we'll probably get a little more of a push, and then it'll probably just be a boring afternoon with a couple more pushes up, and then maybe we're just like lifting into OPEX. So I was thinking, I want to be holding runners. And I can't do that with Apex, so I'm going to use my cash account. Well, the good news is I'm only down $11.50. So that's the good news. The bad news is that I was up about 300 earlier. So I took one off process trade. I can show you it. And all the rest were on process, meaning like following my plan. And the one-off process trade was basically just a bit of tilt, and I benched myself for it accordingly. What I did, and I actually made an adjustment to the signals too. I removed one of the signals from the NQ chart because I realized. Wow, we got a lot of lines here. Let me erase some of these. I realized that. The NQ and ES have very different behavior when it comes like rotation to rotation, and I'm finding the trades with these squares, which is related to rejections or acceptance of the 2-hour VPOC. It's a new idea, but the concept is, if you're in a down market or assuming you know the direction, right, then you should be able to take yellow squares and get continuation, because what it basically means is that they've come back up, tested an important level, and then rejected off of it. So they're working on ES. They're working on NQ. What was happening? I took it off this chart, but you'll see it here on the busy chart. I don't use this one to trade anymore. It's too many signals. But what you'll see here, and this was pretty frustrating. So they start showing up here, and this is just it's just the difference between ES and NQ. NQ, it starts showing up here, and you can see that this one was not positioned very well, so you wouldn't probably take that. I wouldn't take that just because you don't. It's not a breakout trade; it's a continuation. So what you want is a pullback to sell, right? So these I'm okay with. Like they're not positioned correctly. I want them up here. This one though, so you got it's just so late, and then they stop it out and then they run it. So like I said, this one you could take this. That's okay, right? You just didn't get the signal that I'm talking about. But when you do get it, it's like in the middle of this rotation here, and so it doesn't make sense to short down here. You want to short up here. So it is giving us, since it's a bearish market, it's giving us an indication that sellers are trying to hold this this dashed line, which is the VPOC from the 2-hour chart. So what they tend to do is they try to hold below it, but sometimes they'll do a little give back on NQ. This is different than ES. On NQ, they'll try to hold below it. If they can't, right, if they find a buyer here, the blue one, if they find that buyer, what they'll generally do is they'll pull their sell orders, they'll let it float back up, and then sell it again, like around the 50% of this. So here, look, all you got to do, in NQ it's just different. In NQ, this is what they do. They pull it, they give you the signal, and they pull it back about halfway. See that? And then they sell. So, and that's not the first time I've seen that, but it's not what it's not what my brain expects when I see these out of position signals. Usually out of position signals like this orange bar here is an indication that you're, and then beating them immediately like this is an indication that you're trying, the buyers are trying to trap sellers at the lows, right? So this is actually bullish to get this so far down and then immediately followed by another algo. It's a bullish signal. So when I saw, like I said, this first one, nothing to do. They're probably going to try to trap them. I know I'm bearish. I don't want to be buying. Then they do it again, and they immediately beat them. And so in my brain was like, you know what? This might be the start of a reversal. Let's see if they can stabilize this level, which is wrong, but that's what I was thinking. And so they come back up. You get the correct sell signal, which is here, and I skipped it because I thought they were trying to trap them. I didn't want to be trapped, right? But in NQ, that's just not the way it works. In NQ, they look like they're getting trapped, but they're just pulling their orders to get, and they're going to give you a better sell where you want it if you're just patient. You don't have to worry, as long as it's bearish, these rips are going to get sold. That's what I'm trying to say, most of the time. Sometimes, obviously, one time they won't, but most of the time the rips will get sold. What will not happen very often on NQ, but does sometimes happen on ES, is they aggressively, during a pullback, they'll aggressively defend an important area like a VPOC, or previous day VPOC, or the developing point of control, whatever. And on NQ, what will tend to happen is they will pull the pressure off and let buyers trap themselves back at resistance and then roll it over, right? Whereas in ES, what you see, let me take off some of these. Sorry for all the lines. Where are we? Okay, on ES, what you'll see with the same exact signal on the same spot, right? So we don't get anything here. We just get this guy who's potentially going to get trapped because he's trading counter trend and he's trying to defend a higher time frame VPOC, which isn't smart if you're going against the trend, right? But he's positioned correctly, so he's not going to immediately get trapped. He's on the right side of the channel, right? This guy is the vulnerable one on the wrong side of the channel, and that is our entry when he gets trapped. this, you can add this. They do it again. He tries to save it. He's going counter trend. He gets trapped. That's your entry. It's so much more straightforward on ES. So much easier. And like I said, that's not the first time I've seen that happen. And so I didn't lose money from that mistake, but the fact that I could have, and the fact that like having these signal me that someone was aggressively trying to short in the hole was it just confused me basically. It got me off. I didn't pay attention to the fact that we're clearly bearish. And I knew that, but I was like, oh, maybe they're trying to reverse it. I should back. I hesitated, right? I was like, maybe it's not so bearish anymore because they're gonna trap these guys. Is what I was thinking, you know. But in NQ, that's not how it works. In NQ, if they do that, sellers just back off. They let buyers commit at the highs, and then they dump it. And so that's your confirmed entry on NQ. You don't need the extra signals. On ES, your entry's here. You don't need the extra signals, right? Your entry can be here. You don't need the extra signals. That you'll find that on that same exact setup on the trade and perform algo. You don't need anything extra. Look, this is the one in the room. This is Simon's algo without any of my additions. NQ, I'm sorry, ES, star down, short, it's bearish, right? Bearish. Orange bars are sells, bearish, bearish, right? Sell, 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 star. These aren't aligned very well, but it's aligned with this one. That's a little bit aggressive. This one stops up by like a tick. But it's, look how aggressive that is. I mean, you're way at the bottom of the channel. But all of those work. And then, with the exception maybe this one if you had a really tight stop. Then here on NQ, you have to be a little bit more you don't have to be as aggressive, but the setups are the same, right? This is your high odds entry. It's just maybe a little bit on the late side. That's an add, right? The stars are usually scalps. This one gets trapped, but it's not positioned right. See, it's not on the top of the channel, and it's going to matter more in NQ than ES. So this one gets trapped. This is the one you want. It touches the yellow. This one touches the yellow. You can short that. This is an orange bar. You can short that anytime it's bearish. And this one's really aggressive, but it does work for an ad. See how aggressive this is? But it's probably going to work because it's still bearish. Now, if it wasn't bearish, those would stop working. And instead, what would work is the green bars and the up triangles. So if it was bearish, if it was bullish, this would go higher, it doesn't. This would go higher, it doesn't. This would go higher. It goes a little bit higher and it fails. This would go higher, goes a little bit higher, fails. This would go higher, goes a little bit higher, fails. This would go higher, goes a little bit higher, fails. So could you have gotten 2 points on half of those? Yeah, you could. But why when you have the bearish signals and you know it's bearish, everything's pointing down, right? The reason people tend to look for the reversals, they have this sense that they're going to get this big, stretch out of it, right? That they're going to get some sort of a outsized return, like their risk reward's going to be like 10 to 1 or whatever, or to 1 to 10. And I'm not saying that doesn't happen, it does. But imagine if your plan was, I think it's going to turn somewhere and you don't have a location and you're just like, I'm going to buy every bullish signal now. Well, you'd take one stop, 2 stops. This one might get your risk off, so we'll just call that even. This one might get your risk off. This one, we'll call it a stop. That's pretty close. So 3 stops and this one gets your risk off. So none of them extend and you took 3 full stops just trying to guess the bottom, right? Like, I realize that's not horrible. It's a 50% win rate, but to get 2 points. But you weren't looking for 2 points. You were looking for 10 points, right? You wanted the reversal. And you really, you got paid okay here. This one, you probably would be break even because of this one. This one does go a little bit further. But in my opinion, once you recognize that it's bearish, rather than trying to guess the low and just take every bullish signal, why not ignore the bullish signals and take this short and this short star, this short? You'd probably get your risk off, or maybe not. Let's call it a stop because it went up like one tick above it. Let's just call it a stop. One stop. This is a short. That gets you paid. This is the orange one is a short. That gets you a lot of points, right? So you might have gotten like 2 10-point extensions, and then at least 1 or 2 2-point extensions, and then you might have 1 stop. So like you're up like, what is that? If you risked 4, or let's say 5, just to make the math easier, up 22, down 5, right? So 17 points. Am I doing that right? Plus 17. I mean, that's 500, 600. What is that? I mean, that's a pretty good day, depending on how many contracts you're taking. But yeah, 17 points. That's a good day for me. That's for sure. I mean, it's almost, yeah, like that's a good day. So you have to decide, like, I mean, I realize that we're taught that the best shorts come out of the top of the channel here. And so if you were really, really conservative, you'd miss all these because you wouldn't be willing to take it since it didn't touch the yellow line. But the truth is it's very, very, very bearish, right? So the signals work. It's just that in the trading performer, and there's a lot of people who are very new to trading, and they don't know really how to. Some of them, obviously, most of them do, but some very new members may not know how to read the market and know that this is not bullish. And so to protect them, the idea is you don't want to short in the hole. And if you do, you might get trapped. So if you're not sure if it's bearish or bullish, wait for your shorts to be up here, because if it's balanced, those will probably work still. The problem is you're not going to get any opportunities to short. Maybe you'll get one when it's bearish. So there's a few ways to deal with that. One is just to be okay taking the shorts that are out of position once you know it's bearish, and accepting that one of them at least is going to fail. The alternative is be more aggressive and get better at holding your winners so that you can take these high odds trades and make them pay you big, and you don't have to take the aggressive trades. Because I mean, what I mean by aggressive, like here, is like you're aggressive. If you're here, this long worked, right? It looks like we might be turning, but we know that stars that develop up at the top of the channel, as long as it's bearish, will usually produce an extension. So would it be okay to take that? My answer is yes. And the result is a huge roll down, right? But we might hesitate because this bullish move worked and it's been really bearish for a long time, and it's like, oh, I bet that was the low, right? That's what my brain does anyway. Is my brain says, I bet that was the low. Let's stop taking shorts because I don't want to short in the hole. And then if you do take the short, it's like, phew, I got 10 points. I'm so glad I'm getting out because this might be the low, right? And then it comes to here and it's like, oh, maybe it is rolling over, but it's not touching the top channel, so I'm not allowed to take it because I'm a conservative trader. And then you miss this, and then you start tilting, right? That's what was happening to me. And so I'm sure other people are also having that experience where you make your rules so strict for good reason, and then you don't know where that should be applied and where it shouldn't. So what I did was I added a few extra lines and signals and stuff like that. And then I also use location to try to determine, to basically limit where I can look for those reversals and to help me identify that this is an okay short even though here it didn't look very, the potential didn't look very good because it's positioned so low on the trade and perform channel. I've adjusted a bit. I'm still using the trade and perform channel to give me some information about like how far things have moved, and I've got like an indicator that dings when it's a good time to look for a reversal if it's balanced. But I'm primarily using this channel instead, and these MA or the POC MAs to help me determine whether or not I even want to look for a reversal, and that's should be helping me. It like I said, I had that extra signal on here that made me miss that trade, and it tilted me a bit. But I mean, it is what it is. So anyway, long story short, the ES and the NQ charts of mine are going to look slightly different, with ES having one extra signal, these squares that are blue and yellow, and they're not going to show up anymore on my primary NQ chart because it's just too much processing power to like have different rules for the same exact signal on two different markets. It's just too hard for me to remember, like, to not react to it. Where because in ES I can just react to the yellow ones as long as it's bearish. I can just react and sell them. I can't. That's not working on NQ. To do it on NQ, you need to see it as a signal to sell at a future point. and that's very hard. Now I do use the arrows that way, but I've practiced that and I use it the same way on both of my both of the markets I trade. So I will show you that. Right now, what the arrows are telling me is if we can't develop above 11093 on NQ or 3680.25 on ES, if we can't develop some volume above that, we're not going to go higher. Now, we might go visit that level. That would be very normal. And it's okay to scalp to it if you have a location that you're bouncing off of or whatever. But as long as this resistance continues to hold, there's really no reason to expect some like miraculous recovery. Now, I mean, it could just happen, right? Like that's fine. But the nice thing is having this arrow here and telling me that someone was trying to reverse the market there. It means that if we do get up here, I can start buying dips. But it also means that if we come up here and reject like this, it's actually a pretty good short because I know that they tried to turn the market here. Like this one is technically okay too, but that one stopped just by a couple points, and then you just have to get back into it. This one's positioned very aggressively, way at the bottom of my channel even. So, but my channel is a little bit different than what Simon's using. But it's not like I've abandoned it. I still do look at it. But, and then it, like I said, it signals me when the location is right for a reversal, but I still have to be aware of where I am location-wise on the chart, because I'm no longer fishing for reversals solely because of the algo. I need to match it with location. There's been too many times where I fish for the bottom and then give up fishing because I like took two stops in a row only to see it go on me, and then I tend to tilt. So the solution is, if there's a clear scalp opportunity counter trend, I can take it. But other than that, if the trend is established, I'm going to try to keep my expectations about, like, I'm going to get a 20-30 point reversal here. I'm going to keep those like buried, try to keep them like underneath my conscious awareness, so that I'm not like seeing this and being like, okay, that's potentially bullish, I'm going to buy it and I expect to get up here. Like, that could happen, but until I have a reason to think that that's likely, I shouldn't be trading on that fantasy, right? Because the bigger picture, well, bigger than the individual bars. So here's the problem. The individual bar right here says that they're aggressively trying to turn it. But I know even on the 24 tick, like when I interpret what this chart is telling me, what it's saying is that resistance is here. So why would I think that it's going to go straight to 11,140 when resistance is right here, right? It doesn't actually make sense, but my brain sees the signal, and because I've seen them rip before with that combination, because it's a strong combination, the immediate reaction is I must buy this because it might go, right? But the problem is like, you then have to have parameters for when that could happen, based either on the individual bars or on like the higher time frame or whatever location. You can't just take every aggressive signal counter trend, because if you did, you wouldn't. You're going to have to make back all these losses, and if you miss the reversal, you're going to be really upset. Is my experience. So, like I said, that's my and then to counter that, what I'm going to try to do to improve further is to try to be a little bit more aggressive with these continuation trades when we're not balanced. Everything changes when we're balanced, which is more often than not. But when we have a chart that has trapped traders and a clear direction, right, or trapped traders and a clear direction, like holding runners and thinking about it more like in a momentum way, not a balance market, but trading with momentum makes sense. Hopefully that makes sense to everyone else too. Hope you guys can hear me. It looks like my microphone's working, but if you're having trouble hearing me, let me know, please. Or I'd appreciate any feedback if you guys are open to typing in the chat. So like I said, I'm not looking for a reversal here. I don't have a location until down in this area, and this is low of day, the pink. So fighting low of day is not usually like shorting into low of day is pretty dangerous too, but you have to assume that there's liquidity down there. So I would rather get long at 11,020, than 11,030, because not only is it cheaper, but the likelihood that we're going to go test this becomes high. And the interesting thing is we didn't break opening range high, but now we have broken opening range low, and we've broken below the low of day in addition on both the S and NQ. So like the idea that suddenly low of day is going to start acting as support again it's fantasizing, because there's trapped buyers now. The problem is that we're so extended that you're going to need some momentum to take any aggressive shorts. Like now that they've gone so far, they're going to start to consolidate most likely. And so both the longs and the shorts could start stopping out if they start going sideways. And that's just the way the game works. And I don't like it any more than anyone else does. That's actually along the arrow and then arrow following it, but it's purple pink and it's the wrong direction. I would much rather be short right now, but this is technically a long pattern. I don't like that it's purple and pink, but what I'm hoping is maybe it'll become a pivot that we can trade off of later, because technically when you see these, what that is it's like there was someone supporting this level, they're trying to add to their order and they didn't get filled, and then we saw it in the immediate opposite direction. So either they're playing with the order book, which I've been seeing today, and we see in OPEC sometimes, and making those arrow signals show up a hell of a lot more than they should. And I'll show you, if we review the day, I'll show you. There were some really strange ones. And this is definitely weird. Arrow, arrow, arrow. Like I can't remember seeing this much spoofing and stuff. That's definitely strange. So now this whole, this whole thing, we want to, I'm going to wait and see who takes this area, and whoever can develop volume either above or below this, I'm going to assume it's like a pivot, but I'm not going to trade inside of here because there's too much disagreement, and the likelihood that they could sweep across this and this is actually pretty high. They could like go just a little bit shorter, a little bit lower, and then come back up and break through it and make sure that everybody gets stopped out before they choose a direction, because they're bastards. So whenever I see purple immediately followed by pink, or pink immediately followed by purple, here is another one. These tend to be pivots. See that? We reject, we get underneath it, and then we reject it. Reject it. Reject it. Right? That's usually how that works, is there's, because the purple and pink bars indicate that the price is moving primarily because people are pulling their orders, and so those who are marketing in are getting slippage. Like they're maybe marketing in when it's 11,060, but they're getting filled at 11,060.25 because there used to be orders at 11,060, but someone pulled them. So when that happens in one direction, it's usually a sign of weakness, but when it happens in both directions consecutively, it basically just means that like they're playing with the order book there and there's no agreement at that point with who owns that level. But once there is agreement with who owns that level, there's like 50% of those people who pulled their order and now want back into the trade. So they end up entering again. And then look, these guys are purple too. So buyers pulled their orders, sellers pulled their orders, sellers pushed, buyers pull orders, buyers try to aggressively take it back, buyers pull orders. That sequence is bearish, right? Like the sequence of events there on the higher time frame than this is bearish. And so if you look at like the 80 tick, I know this is getting kind of convoluted, but if you look at that same area in the 80 tick, what you're going to see is probably a bearish bar, because the sequence is bearish, right? And if you looked at like a 30 tick, somewhere in between, you'll probably see a bearish signal to get short. Why isn't it copying here? Hold on. Oh, I don't have this one. Okay. Number 2. Hold on. Drawings. I don't know why it's not included, but it's not. Okay. Oh shit, what did I do? No, I really fucked it up. Chart. What the fuck? Settings. Okay. Can't control mouse. Copy chart drawings from chart number 2. Oh, there they are. It just took a minute. Okay. So see how this first one is the one we're talking about? See how there's a trade signal here? That's not an accident. That's because the algo is reading order flow. And so here, make sure I'm making sense. If someone can confirm this makes sense to you, I'll stop talking about it. But I just want to make sure it makes sense. So on the zoomed in time frame, it's a sequence of actions. Buyers pull orders, sellers pull orders, sellers aggressively sell, buyers pull orders, they try to take it back, and buyers pull orders again. That whole thing is a bearish sequence. If I then go to the higher time frame where it takes, rather than 15 points to make a bar, now it takes like 18 or 20 points to make a bar. Now what you have in place of that is pink bar followed by star, which is a sell signal on the algo. Why? Because there's a pattern of, there's a sequence that is bearish, right? Here, that's your sell, but it's aggressive. On 32 tick, your sell is way back here. See that? You were alerted to it earlier on the higher time frame because, and if you know how to read the algo well, I could have shorted this because if you would just, you knew right there, once they came back up and rejected, you would short the breakdown, of you'd short right as they broke down here because you knew the sequence. But if you were just trading the signals and just waiting for pink bar star, pink bar followed by star, and that's all you do, like you wait, then maybe you wouldn't get short till here. Or here if you were more aggressive and you could take star diamond. Just depending on how aggressive of a trader you are. But like I said, the benefit of really understanding the algo and not just trading the signals is that you almost know what's coming before it happens slightly, because you know you identify the behavior. You know what the algo is looking for. So like the behavior is bearish, and so now I just need a bearish opportunity. But if you don't want to learn that, well, just watch more than one time frame, right? And if you get a sell on the 32 tick, chances are sells on the 24 tick are going to work. Like this is probably going to work because it's already a sell at that point on the 32 tick, right? And the higher time frame almost always has precedence. So like you could even say right now, star diamond followed by star is technically bearish. It's also a pink bar followed by star. So this is saying probably bearish on the 32 tick. That means that bear setups on this time frame will probably work. Now it's a breakdown and it's at the low, right? So I mean, if it's going to fail, this is where it's going to fail. But technically, if the 32 tick says bearish, then this sequence of behavior on the order book and the time and sales and all that on the DOM and the what you normally see on the footprint, that this was a bearish sequence, right? So in other words, shorting one of these rips makes sense if you want to be aggressive. I don't know if I really want to be aggressively shorting the low of the day, but if you had a reason to be trading here, that's kind of like an advanced way to interpret the algo, is let the higher time frame confirm the direction and then look for the location and execution timing on the smaller time frame. Am I making any sense at all, or is that way too confusing? It's just using multiple time frames to confirm your bias, and then using the it's the same thing everyone does with candlesticks. It's just we're just reading the algo instead of candles. It's like if you saw a bull flag breakout on an hourly chart, most likely a cup and handle on the 1 minute, probably, if it's bullish, is probably going to work. I don't know, you knew that already, but yeah, or like a head and shoulders, like a bearish head and shoulders triggers on an hourly. Well, now the bearish rising wedge or whatever on the 1 minute is probably going to work. Is it 100%? No. In fact, here it might not work because it's at the low day. But let's see. So could they develop volume below this pivot? And the answer is no. They got price down here and they responded. Once they got volume down here, the yellow line, they responded by buying. So they did not develop any volume below the pivot. So from my point of view on this time frame, it's still neutral. On the 32 tick, we had an aggressive short signal that worked here, star diamond, or diamond followed by star. Star followed by diamond's better, but this is basically aggressive buyers getting met by aggressive sellers. So there are aggressive sellers at the low. So what that means is it's technically bearish, but if we can get over them, they can get trapped. And this is where you get the big reversals that give you exponential returns when something like this fails, where there's lots of bearish sequences at the lows and then they all get trapped. So there could be a bull trade here too. It hasn't set up yet, but it could happen. It needs to get up here and they need to trap these guys. So let's see what they do. They could just chop back and forth in these pivots. I've seen that plenty of times. See, this held the first time, and I'm not so sure it'll hold the second time. We're not going to anticipate that it's not going to by buying it on a breakout, but we're going to observe where they turn around if they give us even another. They might not give us another entry. If it just V's straight up, like it's like, okay, I just missed that one, no big deal. Oh, I forgot to mark the arrows. So technically it is bearish as long as they develop volume under here. Okay, my pivot already told me that. So that's the line in the sand for bears. They need to get under that and develop volume down there. Although it's technically already bearish, so. Oh, and then, oh wait, bulls put in one too. Fuck, I forgot to mark this too. If bulls can develop volume up above that, then dips can get bought. That's interesting. So there's this big space in here, the pivot, where no one really knows who's in control. But if bulls hold it, it can go higher. If bears can get under it, it's not going to go higher. It's going to go lower. So that's your line in the sand is right here, between 11.057 and 11.075. That's funny that it's flipped over. I didn't just ADD that, right? That's, yeah, no, a little bit dyslexic. Sometimes I'll flip those, but that is literally just the opposite. Okay, weird. So let's see. We developed volume, one bar volume. It's a decent amount, not as big as the initial impulse. Above this pivot, and we've also closed above this MA, which isn't an entry, but it's a sign of progress by buyers. Oh, they put in another arrow. So now this line in the sand for bears is here. Cool. And that makes sense because now they develop volume above, so they need to hold 11.069. They can test below it, but if buyers don't show up under 11.069 now, it's bearish, is the interpretation. So let's see. If buyers can show up here and save 11.069, it can keep being balanced or even go higher. But if buyers quit and sellers start getting aggressive below 69, it's probably done. And we'll see on the higher time frame. This guy, they're trying to trap him. See that? They're getting above him, trying to trap him. And so the red line here, 69, is basically the the sellers would release him from his trap if they can get underneath him, right? So technically, buyers have a little bit of an edge here because they do have him potentially trapped. You could take an aggressive entry on a dip, but you'd have to be out if they put a POC below 69 on a bearish bar. So you'd have to have your stop like down here somewhere. It's too big of a stop for me to take with futures, but because we're at the low of the day, like buying like calls here does make sense. Okay, so we shifted volume higher. It's way up high on the channel. It's pretty aggressive to buy that, but it's technically a buy signal. It's just not positioned very well. We would prefer it to show up down here, and sometimes they will stop out and then get another one in the right place, and then that's an excellent buy. So let's see what they do with that, because that's a vulnerable buyer. I'm not going to buy it. It's too aggressive for me. It's above the channel, and I'm supposed to be selling above the channel and buying somewhere down here. But let's see how they deal with this. Like they shifted volume up right at the top. It's a pretty aggressive move by buyers. And you'd think if sellers have any pressure left, they should easily trap that guy. If he gets stopped out, we might get our chance at 69 to see if they save it or not. That's basically what I'm waiting for. I'm not gonna, oh wow, that's a sell signal. Should we take it? Let's see. How bearish is it? It's technically not bearish unless it can get under 69. I mean, it's been bearish though. So I'll follow the process and wait. Where's all the volume here? It's low. Oh, it's the lows here. All the volume is down here. We established volume above. It's probably not a great spot to sell, but it's technically valid. It's just we've gotten volume above the VPOC of the wave down to the low. Sorry, my cat's noisy. So if they do sell it, the problem with this is if they do sell it, buyers are going to show up here more likely than not. So it's like you're probably not going to get the risk reward you think you're going to get. if you sell that. It's tough though because it's in the right position. It's above the channel. The high is above the channel. So like, and it's bearish overall. But because all the volume is at the lows, there's a good chance that buyers just show up right here. So I guess you could take it for 10 points, but like, what's the point of risking 15 points when you only think you're going to get 10? When I can probably get a better trade down here once direction's confirmed. Okay, back to 69. Now let's see if they can hold it. If buyers hold this, we could actually have a reversal on our hands. They just need to protect that yellow line. If the yellow line gets underneath 69 on a bearish bar, chances are they're gonna take it. Buyers would need to respond immediately if they do that. Let's see. Uh-oh, there it goes. So VPOC is down to 69. Do they respond? So star up here would be an aggressive buy. Like it, yeah, like because they protected the level. But you might need to take it twice because it's above the channel low. So that you really want your longs to come about down here. And so if it doesn't go any lower, but it prints a star, it's technically okay. It's just aggressive. What I would love is for them to print it down here, but keep the yellow line up here, and then to print another green bar. That would be ideal, but we might not get that. They're right in between these lines in the sand. See that? Oh God, it's purple pink again. Let's see what okay. They defended it. Not enough sellers pulling their orders for them to print a pink bar. Sellers need to get aggressive down here. Like I said, this one was technically valid for a short. I just didn't want to be aggressive into the low, but if you have a target lower, that's your sell. It was just aggressive because of all this the pivoting here. Like these usually produce pivots after they leave. They usually bounce here more often than they don't. How high they bounce, that depends on a lot of other things. But the likelihood that this is just going to create a big drop is lower than I'd think because of that, because developing volume above the pivot. Okay, so they sold it, but the bar was above the line in the sand. Now, if this is purple, it doesn't count. If it closes purple, it's not enough aggression. It's just going down because buyers are pulling their orders. They would need yet another bearish bar below to confirm. So basically, as long as sellers don't aggressively sell this, it could still bounce. Purple bar. So buyers need to respond now. And if they do, it's probably a good buy. So that can put our order at 69.25. And if they trade to 69.25, it's a relatively good chance that we get a little bit of a bounce. It needs to hit 69.75 first in this bar. Otherwise, I will cancel the order. And it's another purple bar. We might get a lower entry possible. Let's see. Oh, if it's not a purple bar, then if this closes bearish, it's definitely over. Thankfully not. Okay, so canceling the order because it didn't trigger, right? It did not get to 69, and they also printed a bearish bar. So all those things are bearish. We've now gotten under the pivot with volume, and we've freed that trapped seller. See that? We got underneath here, and they're trying to free this star that got trapped briefly. And it looks like they're succeeding. But again, like, I don't feel like I really missed anything with that short, because shorting into the low of the day is like not really what I usually do. And the chances that this bounces in here is pretty high. It might not bounce for much, but they're going to try to save this. I would not buy this personally. It's technically valid because it's a trap. They traded below the low. Oh, that's not the low. Did they trade below the low? By a tick. They traded below the low. So technically that is a valid long. I'm just not taking it because my additional signals So what I'm trying to say, on the trade and perform training, this is a long. This is a valid long. I don't take it when it sets up like this because of the pivot being lost. But that's my own addition. I need a higher win rate. So I know that these don't work as often as they do when this pivot is not lost. It hasn't stopped yet. Okay, so they would have just got stopped out if you didn't have the additional signals. And like, it stops happen, no matter what your program is. I just have found I can avoid these. You just have to be alert to the arrows. But like I said, or the purple pink bar pivot would have also kept you safe. So no more trades. Coming into power hour and coming down to low a day. Did ES get to low a day yet? Oh yeah, they're pushing low a day at ES. So technically, if you were bearish and you wanted to short into low a day, that's your short. And then they triggered again in a really vulnerable spot. Technically, though, that was a short, just like this one here was technically a short. It was just, yeah, you'd have to be pretty aggressive to do it. Okay, let's erase the line, start over. We've got a new low, so we need to do a new draw. Okay, so once they pivot, we can see where the volume is here. Currently, it's all the way up there. Oh, interesting. So there's lots of volume in this current bar. So we might get a little bit of a bounce attempt here. And the bounce attempt would come back up to this orange line, most likely. It's a decent scalp, but to expect a huge turn here is not usually how it works. Is this technically a trap again? Let me see. Is there a... Oh, I can just look for a green line on my other chart. Hold on. Yep. So there was a earlier... This is technically a valid long if it closes at 57, but it would be on a much higher time frame. So on this time frame, it's not bullish, but on some higher time frame, maybe the 80, there is a pivot, this one, that we're interacting with. So if you thought that this was a level that you liked to hold, expect to hold, then looking for a long in this location makes sense. I do not, my level is lower than that. So we wait. Let's see what they do. They probably want to come up here. Okay, high volume and aggression. If it's bearish, they will beat that. It's below support. That might be why there's volume. But look, there's no delta. There's no delta build there. Not a lot of people got trapped at that low. It's probably not ready. Is this going to be pink bar, purple bar again? Wow, it's so fucking choppy. I'm telling you, today's price action has been really weird. And I'm pretty sure it's related to OPEX being tomorrow. Wow, okay, that was big. What the hell's going on? Was that news? That was strange. Just looking at the DOM, it just looked weird. Okay, I don't know. They triggered buy over here on ES. If you're not super bearish. If it's balanced, that's a buy. And if you think we're balancing at the low, that makes sense, right? But if you look at the POC MAs, they're dropping pretty hard, right? So chances are you're going to get stuck here if it does go. So you have to be realistic with your risk reward. It's probably 1-to-1 risk reward. Ooh, the POC shifted down. Um, Probably 1-to-1, realistically. But your stop has to go under the low of the day, which sucks. But yeah, if there's a chance that you think this is balanced, it can definitely lift here. They got the volume shift. We'll see. I'm not going to take it personally. Just because the risk reward just isn't good enough for me to be looking for bottoms. And like I said, I don't think this low is very good. So, did I draw that right? Yes. It's technically not bullish unless they can get volume up here. And then you could look for buying dips, but I kind of doubt that's going to happen. It could. Now, yeah, the only other thing to think about is the fact that there was a high volume area down here, like a node down here. So if they print a couple more bullish candles up here and then come down and print a green bar back up, that could technically work. But that would be suggesting that this was excess. So if that's how you see it, then it makes sense that this was excess at the lows. My problem is that I've got levels down here, and even though it does look like it's starting to kind of like balance into like an accumulation phase, I do agree with that. I didn't think this looked very impressive. It was a neutral delta at the bottom, and even though there was a lot of volume down there, there was right on this bar. That's why it's pink. There was a lot of volume down there, but it wasn't people getting trapped. So I don't think this low is safe to put a stop under. I think it's probably going to go down here. That's the only reason I'm not buying it, because it's technically valid on ES. And a lot of times, if ES is bullish, then NQ is probably going to do a bull rotation too. So we'll see. Back up to that 49 POC MA, up to the POC of the wave down. Maybe they will hold it. One of those situations where having a location can sometimes be a detriment, but it saved me from a lot of other potential stops. So, well, you can see the 49 POC MA is still quite a bit farther away on NQ on ES. We did print one bar above it, but yeah, like we did here, very similar to this. And so once again, if they give us an orange bar, aggressive shorts could try for a scalp. If they then come down here and give us a green bar, that would be an aggressive buy entry. But that's about the only way I would be able to trade here. Unless I would have taken this, but like I said, I didn't see this as excess. I thought I needed to get down here, so. And it wasn't a perfect trap either. Yeah, it trapped here, stopped out, and then came back in. Could be wrong. That might be ideal. Certainly looks like they're buying it. This was the low. They got volume above it, came down, tried to bounce, took it out. That might be okay. Because of this VPOC getting traded above, taking this might have been okay. I'll have to look into that. That's a trade I've missed before. Because usually it makes this a pretty good buy, but I knew to skip that because of the pivots getting rejected. But then the question is when this then gets taken out and you get an immediate defense, does it make this trade valid again? Because there are some trades that do that, where it's invalidated on the stop, but once you get back through it, it revalidates that level, and then you can get in here, is the idea. But I will bring that one to my coach. That one, that's a tough one. That's a tough one. I didn't see that in real time developing like that. I did not anticipate that, so no way I could have taken it. But in retrospect, I see how that might have worked. Let me just see, what did it look like on this one? Yeah, so on the 30 tick, it's just a regular old trap. And there's no pivot to work through on this one. There's no pink bar followed by purple bar, and there's no arrows down here. So on the 30 tick, this is definitely valid. And because of that, this is valid to buy it on the pullback. Yeah. Yep, that's the way to think about it. That's funny, I just got done talking about that, and I missed it. That's what I get for not having both of them open. That's why I usually keep at least one other time frame up here in view, but I had NQ covering it up. I mean, yes, just so I could watch both. You can't watch everything. I mean, I guess I could make it smaller, but it's hard enough to see as it is. Yeah, that makes this a pretty good buy then, because it's a higher time frame. Darn. Okay, well, I can practice that. I'll have to look and see how often that doesn't work. But in essence, it's just a higher time frame trap. The high volume was definitely a hint. But like I said, I got tricked because they didn't put any delta down here. Alexa, go home. You're drunk. Stop asking me things. Trying to say I wanted to play a game. I don't know what I said. But yeah, the fact they didn't have any delta down here, like relative to what's up here, made me think that it wasn't a strong enough trap. But clearly it was. Well, that's embarrassing. But like I said, we can learn from this. And I will look and see if I can identify those in other spots. Let me see if they caught it in the room. Okay, I'm not sure. I'm not on voice because I don't want to accidentally pick up Simon's voice on my free YouTube channel. So but this is the type of trade that Simon usually catches. So he might have called it out on voice. I don't see anybody high-fiving in there yet. So if they did take it, they're holding it. But now that I look at it, that was definitely valid on the 30. No question. So. And since the 32 tick is bigger than the 24 tick, it usually has precedence when it comes to direction. But like I said, the hard part about this was that you'd have to mark this at 63 is when you'd know, is the first touch of 63. So you'd know when this pink bar was done that it'd be valid on there, and then you'd have to buy the pullback, which is hard, but possible. Interesting. The other thing to think about is I've noticed that when I get a star with a pink diamond at support, that volume anomaly is often enough to give it a lift. But like I said, that's only in balance. And I did not see this as balance. I thought we were going to do one more. But like I said, it's a good example where if you get too biased, you can miss trades. Because in this case, if you just look at the VPOC MAs, the orange and the pink and wherever the green one is up here, like the green one's obviously really bearish, and the orange 49 is flattening out slightly. But look at the pink. We got over the pink for multiple bars, which only happens in balance. When it's bearish, that pink acts as resistance, and if you get up there, they reject it. See that? Reject, 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 reject. That's bearish. Here it's like multiple bars on top of the pink line, and so right there, I should have known when we got that test above the pivot, I should have been aware that that probably means that the lows could get bought. They just had to whipsaw you one more time. And like I said, they also triggered correctly on ES. That was clearly a valid signal. I could have just gone long ES. I did see that as it was happening. The way I actually thought about it the exact opposite. That if this one tags out and comes back, that'll be a really good trade, because I didn't think NQ was valid yet. So that's on me, but something to learn from for sure. What was that trade worth? If you got in, let's say you got in at 63.99, 35 bucks. All right, let me run to the restroom. I will be right back. If you guys have questions or whatever, put them in the chat pane, please, so I know what you guys want to learn about. Otherwise, we'll just keep watching. Be right back.
is so.
Music down. Here we go. Okay. Let me turn this off. Cool. You guys should be able to see and hear me again. Let me know. Even though I might have made a mistake, it was a mistake. It was definitely an error, but it didn't cost me anything. But the potential profits are missed, right? The important thing is to note it. You want to learn from it, right? And you can think about. You have to review it and see what you missed. But you don't have to do it right away. But you should write it down. So what I have written down is NQ 1020 1344 50. Right? So I've got the level. And then I put, what did I say? Yeah, 32 tick, triggered long, check 24 tick. So I can elaborate on that more, but the idea is I need to not get too zoomed in. And if I am going to get zoomed in, I need to check what the conditions are of my current time frame before I consider being biased. So, like I said, the big mistake was not identifying that this move up here makes the likelihood of balance higher. That was the big miss. Like I said, my additional rules were able to keep me from getting stopped here, but I went the next step to say that that means it's bearish, which is not actually true. It doesn't mean it's bearish. It means there's just a bearish sequence of events. So if the higher time frame shows something bullish there, it's actually balanced. It doesn't invalidate what happened earlier. Now I'm not gonna fight this move, because when you get one of these sneak below and push, these are usually pretty big trades. I can't chase it, but I'm not gonna fight this. Especially not the day before OPEX. But if you look on the candlestick chart, you can see we're probably heading back to the previous day's point of control. Probably. We technically put in another higher low, but not on the day, right? The regular trading hours put a lower low in, but if you go to like a higher time frame, like a 4 hour, what it's going to look like is almost like a head and shoulders kind of pattern. But it's not at support. See that? It's a head and shoulders, but it's right in the middle of this balance zone here that was established back here. We're still renegotiating that. So how do you deal with this? Well, one way to do it is to figure out where was all the volume the first time we did this. And that would be here. Okay, and then you can mark So POC is there. And then we've got, value area high up here that day, and value area low down here, which is pretty close to the other one I had marked. So we're going to make this blue and this blue. And let's see if we have any reactions to the red or the blue. Yes, red, blue, we got above it, rejected it, blue, got below it, red, that's the other red. So the blue one had a reaction briefly, but not much, the low. the POC has been much more active and the high has been more active. So while it could reject here at 23, it hasn't been a reactive area repeatedly. So I'm not gonna get too committed to fighting it when it hasn't been consistently working as a level, but we can put it in there. And then I don't know if we'll get there, but 38.25, 238.25 is the POC of that area. 238.25. 238. Jeez. And that is red. Okay, so we'll see. We'll see. But yeah, it would normally it would make sense to take this if it's balanced or bearish. It did reject pretty much right off of that volume area low. This just looks pretty damn strong. We haven't been able to get any bearish bars to print underneath the pink. They're completely above the channel, and it's a dominant wave up with the POC way down here. I'm going to skip the short. Could it work? Sure. Where is it probably going? Probably back here. So if you want to take 10 points, might work. But I'm going to have to risk. I have to put my stop at like 23.15, 23.25. So is that even worth it? You know, I mean, the one reason to take it is that we do have a level that might work this time, but it hasn't been consistently working. So, yeah, I will wait. Technically, though, it was a sell signal. As long as you don't think it's super bullish. We're also getting over this 150 PLCMA. And we did develop some volume above it. That's not bearish. Usually when these get really close, the brown one and the green one, usually you get choppy, balanced, like lots of up and down, not unidirectional, usually. So that could be a good thing. Could give us a trade opportunity. Let's see what it does when it hits that wave up POC. They did develop volume above it. If you thought it was long, your best opportunity is to wait for a green bar or a star that touches this. So like a wick down and then a star up. Otherwise, just like a green bar anywhere, preferably at the back of the channel, is usually the place to go. Otherwise, you can wait for a significant retracement. Draw it here. Oops, that's the wrong one. So anchor it at the bottom, draw it up. So get a so back to 11,070 or so, and then you could look for a signal back there and be a little more aggressive. Okay, we got purple bar, pink bar again, so we're going to mark this as a pivot. Play this game again. Let's double check the higher time frame. Did signal short. Interesting. So bearish. If it's bearish, that's a short. The question is it bearish? Well, we've now gone above the 49 and the pink is rising. I would say it's balanced to bearish. It was bearish, but is it still bearish? It's probably more balanced on this time frame. So it probably doesn't work all the time, but sometimes it'll work maybe a little more than half the time. But let's see. They could just hold this, develop on above, and then we could buy a dip into it if we have time. Let's see. I might do a review of the day after the bell if people are interested at all. I could do that. I'm kind of curious anyway. Yeah. Because I know I missed some opportunities, but I also just want to see earlier on. I had a sense that things changed quite a bit when London closed, and that happened yesterday too. So I'll take a look at that too. Now we just wait. I'm definitely not going to take a trade inside that pivot. No interest whatsoever trading in there. It's interesting that they got this bounce and then like speed just like dropped. Like now it's just no one's interested in trading it anymore. Like, and especially at power hour, it's a little bit weird. Watch, they just like pull the rug. Nothing to do. We're right at opening range low. We're trying to retake that. Let's see. What about ES? Anything going on over there? We got the buy signal. You could have taken a continuation trade here with the blue dot and green. Yeah, it's cleaner on ES. Looks like this short kind of is working. But like I said, I think the pink would be your primary target. And I didn't think I'd have risk reward to take it, but it looks like it's going to work. Usually when you get these V bottoms, usually the next dip just gets bought, you know? But sometimes you do get pretty significant retracements, but oftentimes it's just like everyone just gives up, especially at the end of the day. But when it's slow, after they put this bar in, it slowed down significantly, so I don't know how I would have known that here, but that was definitely weird. Let me just check on this. Yeah, so once again, the higher time frame was accurate a couple times in a row. I ought to try just like trading options with a bigger stop and just using like the higher time frame. I should just do that. Rather than trading futures in my cash account, I might just trade options on futures. And that way I can stretch the risk reward a little bit. Yeah, hadn't tried that, but it looks like it worked today. In the review, we'll take a look at the 32 chart. 32 tick chart. I can talk. Okay, so we did get to the pink line, and then they're trying to reverse. See that? So if you're bullish, a green bar here is technically a buy. It's not a very big retracement, but if you've got your sights set higher, a green bar here would make sense. It's going to probably trigger on ES too, but you don't know until it closes, obviously. Might have to try it. They're holding them. So it would be 99.25 would be the stop entry if you want to do it aggressively. Otherwise, just have to wait till 99 hits and then buy it pretty much anywhere in that range. On like a pullback or whatever, but then you might miss it. But this is a sensible place for them to bounce it if they're really bullish. Slightly suspicious of that, but that's what they were saying down here. But like I said, I kind of think this low looked kind of sketch. See that? It's just not very. I don't know. There's no excess really, in my opinion, and there's no delta either. It's all delta neutral down there. I think it makes sense to kind of rip it down. I hate to say it. It looks like it's not going to trigger. Tempted just to take it though, because I've missed so many other ones that triggered that I didn't take. It's not a good reason to get into a trade though. Okay, well it didn't trigger, so nothing to do. So the fact that this orange bar created such a big drop makes me think it's probably not bullish, even though it looks like we tried to put in a low. These won't work if it's squeezing. So, and then we rejected out of the pivot. Oh fuck, we rejected out of the pivot, retested it. This is technically a short. I missed that. We closed out of the pivot with a VPOC out of the pivot, came back into it and rejected. Could have shorted that. That was a mistake. Fuck. Like I said, I was so distracted by waiting for the bull trade to trigger. I didn't even think about the fact that I might have a continuation sell there. But like I said, the fact that this worked and the 32 tick was bearish means that you could actually short right there. Dang. That was actually, yeah, that made sense. Not on my game today. Same thing yesterday. I made some executionaries yesterday. This wasn't as bad as what I did yesterday. Yesterday it was like, try to get into an order long, accidentally put in 2 short orders, and then suddenly look and I'm short. And that one gets covered and immediately goes into reverse because I didn't delete a different order. Like there's all sorts of error. I looked like an absolute rookie yesterday. And of course I was doing a stream. It was so embarrassing. So now I'm like extra cautious, trying not to get in stupid trades. It'd be really nice if I could end the day not at down $11 though. That'd be great if I could end the day at something more respectable than negative 11.50. But I don't, again, not a good reason to trade. It doesn't matter what today's results are. But when you make like 500 plus one day and then lose $11, it's just like, man, what are you doing? It's at me of like 7 hours. Like I'd almost rather lose the 500 and say that I gave it a good try than end the day with like 4 trades down $11.50. Which is stupid, but that's just the way that my thinking is. It's like, did you even try? Do you even lift, bro? Right? Okay, so where's my 61? Okay, we're at it. So this is where the green bars start to work well. Is after you've done a 61%, 61.8% retracement. We got under green bars here, which is bad. That's bad news usually. There was no green bar here. But there was on ES. That's usually a sign they're not going to work. They might just take the low, I'll be honest. Fuck, I should have just taken that scalp. I did not want to sell into a squeeze. But the algo did say it can be shorted right here. And like I said, I could have taken this short too. So I actually had 2 opportunities to sell it and I missed both of them. And then I just completely flaked on the setup for the bigger move. Okay, if we get a green bar here, it's definitely I will try it. I will attempt it if it's a green bar. Can probably take a star long too. I really don't want it to have a lot of volume though. If it has a pink diamond, it'll probably fail. So we'll see what happens. Oh shit, this isn't right. Okay, let's see what they do. Star. Star. The stop is going to be 68.50 maybe, as long as they don't go any lower. It's a little risky. I don't think the low is intact. The algo has to trigger for me to do anything. So far there's nothing to do. It's also almost the last 30 minutes of the day. I'll take it in the Apex account. I'll take it in the Apex account. In the evaluation. I'll do that. Sucks ending the day at down $11, but it would suck more to give it away at the last minute. Technically, considering I didn't trade great, being down $11 is not that bad. So let's just leave that alone. Live with the guilt, and we'll do this one in the evaluation account. We'll see if it works. So long here, stop is here. They might just, that'd be funny if they just rip it down. And the reason for this trade is we made, whoops, I keep on grabbing the wrong tool. We made a 61.8 retracement and then got an aggressive, my God, found an aggressive buyer right at the 61.8 retracement. That's all it is. It's just, if this is bullish, this is where they show up to save the trend. And they showed up. Right now I can add to my order here if I want. And that way I can sell some where I entered the original one. It's aggressive, but allowed. Your stop stays in the same spot for the ad.
Order filled.
Okay, I took a half. Stop is at 68.75. I will take some profit. Okay, so I already got some profit off. And that's gonna, because I exited the ad. I'll explain it in a minute. Let me just set this up quick. So I was long 12. Now I'm long 8. I might. Okay, we'll see if we can push this a little bit. I don't really know if it's gonna work, right? Like you never know if it's gonna work. But what I'd really like to see is for them to test 1100 again. And they might stop me with the rest. That would suck. Wow. Well, that blows. Looks like they're going to stop me. Didn't yet, though. But it looks like they're going to. This is where you add, down here now. I already did the ad. I'm not going to do another one. But at least that way I don't lose as much. But I did cover the ad already, which makes the actual stop sting a little bit less. But I only got like 8 points on that, so it basically means, and it was only on half size. So I took 8 long up here. I don't remember what my average was then, but then I added, and now my average is down at 84.25. Oh wait, that would have changed because I added as it was dropping, and then as it bounced, when I got a couple of points, I took the 4 off, and then that way And then once I took the 4 off, now my averages is 84.25. So technically I could scratch the trade here and be break even. If like you don't like the trade, you can like get out of it positive. Tempted to do that. Really tempted to do it. Probably should do it. But technically you could scratch the trade because you know, because I already got paid some, I could scratch the trade here. You know what? It's probably a good idea. Ugh, I just hate being long at the end of the day, but okay, let's scratch it. I don't trust it. It'll probably go now that I exited. So I scratched the trade for a loss of $50. I had a chance to get out for a gain of like $20, but had I taken a full loss without the ad, it would have been a $280 loss. And then if I would have taken the ad with the ad, it would have been about a $320 loss. But like I said, I got the 7 points with the 4 contracts to lower my average basically. Took profits as it came back to my initial entry. And then it almost stopped me out and then bounced back to my current average. And I marketed out, which had a little bit of slippage. So I'm down $54. But the good news is that I, by kind of finagling it, here's the thing. If it works, what it should do is just take off. It should be a pullback and everybody wants to get long. And it maybe takes an extra bar, but it should just go. See, I would have stopped out right there. I would have been pissed. Because it's the end of the day and I can't make it back. But yeah, what you want to see there, because since you're just buying pullbacks, is you want to see this maybe like go 1 bar and then go. And there was just no interest. And they printed a bearish signal here, which is a sign of aggression. And that they trapped someone at the high. That's what this diamond inside the bar means. They're red on the way down and white on the way up. And if you trade these with the trend, they will give you entries, the diamonds. But you can't trade them counter trend. And because it's balance, I wasn't really sure how to interpret it. But since this short worked, there's a decent chance that it's bearish. But all of the POC MAs are like mixed up, which is usually a sign that it's not directional at all. It's just balanced. So you just long as low as you can and short as high as you can. But that could change very quickly. You know, if they take out this low, things could accelerate pretty quick. But I didn't have a read. Well, I guess I kind of did, that I thought the low was going to go. But like I said, I thought that this looked pretty promising. And I thought maybe they were just pulling back and then they're going to rip it into the close. But let's double check what did this tell you to do? So it said buy this, short this. There's no signal here, so stay short. So the 32 tick is still bearish. See how we're crossing pink underneath orange and gray? So all of those POC MAs are pointing down. And then you can find up here, whoops, the green one somewhere is pointing down. See that? So eventually they will connect with this and retrace into it and then chop and accumulate. But that doesn't have to happen today. And then in the very highest time frame that I use, well, not the highest, but the highest time frame I would ever trade from is the 80 tick. That gave us an aggressive short here with that trap signal, suggesting there's someone trapped up here at the highs. And then they got to add to be short. I don't have the lines on here, but it's clearly short here. Pink bar star. So it's bearish. It's bearish. Oops. We could erase all the lines here. And then if you want to go higher than that, out of curiosity, I do have this. It's got a lot of signals, but this is the 160 tick chart with like every algo I've ever used. And so these bars go 100 points basically. And so this one was bearish, and it's been bearish all the way. But you can sometimes find levels on these. I really shouldn't have all my levels added to this. It's too busy. But you can actually locate levels here to trade off of, like this, for instance. Could try to short that. And then when they retest it from over here, you can short it. The support and resistances that are respected are generally continue to be used on this higher time frame. And then the actual signals, while they're not really tradable because you don't want to have a 100-point stop, it's meaningful if you can see someone get trapped or see an aggressive trader succeed, like this star followed by star. That means this whole area is probably support down here. You don't know where it's going to bounce, but most likely you're going to get a buy in this area. So these guys are the ones that tried to support it, and now we are under them, right? So if this goes any lower, this low is probably going to get taken out because they've already tried to save it, and they've looked. It appears they're going to fail. And I'm not a huge believer in like double bottom, triple bottom. Like you can get double bottom, but any more than that, like come on. They tried to save it, it failed. Then this is the 200 tick, which is a little higher still, but just less stuff. And so here, pink bar, star, sell, pink bar, star, bearish, right? And so if you mark the areas where you get short here, whoops, you'll often, I guess it didn't like that. Why can't I draw a line here? That's weird. I'm getting a error, like it's requesting market depth. What the hell? It doesn't like that. I'm getting errors when I tried to draw lines on this. I don't know why. I will have to investigate that. Oh, this is right? Oh, that's really weird. Well, I can look at the level with this. 269.50. And then here, where it gets long, is 204. So see how 204 became a pivot? And then 269.50. So 204 to 269.50 is like the mid, where you don't really want to do a lot of trading. $204. Oh, it's way up here. That's okay. We'll look at it later. I didn't realize we're like 100 points from that, so that's not going to be useful. But I'll show you later. It's kind of a neat trick. I don't know why I can't draw lines on the big one though. I must have a setting wrong. I will try to fix that later. Also, they bounced it, but see, this is way too low. And they've on NQ on ES we got a warning because these green bars should not get taken out fully like this. You should not see bear bars with POCs below these POC shift signs. You can't sustain that. You won't be able to stay bullish once that happens. So get it like here, this, right? Once you get that yellow line to go underneath this, then the bounces are not going to go anywhere. See that? Until you trap somebody, which happens here. Does that make any sense? It's kind of complicated. I'll show it to you later if you want. It's just conceptual. It's not my specific setup. It's just the way markets work. When you trap a trader who's when you have a volume shift in the direction of the trend, and then you trap that trader that pushed volume up, you're not going to be able to continue in that direction that they shifted volume until you trap a trader going the other direction. It's pretty cool if you want to see. It's just kind of complicated, but I'll show you. You could build a pretty cool signal out of it actually. It's a very reliable trade. But I'm not going to go into it unless someone's actually interested in Learning how it works. Okay, so that is an aggressive sell. Should we take it? Oh, fuck no.
Order fill.
Let's. Oh shit! I didn't realize it got so far. I just marked it in. Okay, my stop has to go all the way up at 83. Fuck, that was a mistake. That's okay. Let's see if I can just scalp this. Just give me one more bar. That entry was sloppy as fuck, and it's late. Give me one more, please. That was sloppy as fuck. I got in really late to that trade. It's gonna be really hard to get my 10 points now because I got such a late entry. I'm gonna scratch it. That was a mistake. I'm supposed to get out when I do that. So what happened? It's a valid short, but the short should have been executed when this closed. And by the time I saw it and went to my dom and hit the button, it got me short like there. And so to get 10 points, I would have had to get all the way down to 55, which is below this low, which is like, that's really aggressive. Not saying it can't happen. It's just, it was already an aggressive trade from up here. But at least what I was thinking is I'm pretty sure I can get back to test this. And I'll get 10 points or more. But my actual fill was 65. It's way down here. I'm out of the trade. I actually made $25. But I didn't want to risk 15 points to get 7. So I just bailed on it at a profit. I should have not taken the trade. And as soon as I saw that I got filled down there, what I'm supposed to do is immediately exit. So, but technically you could short this because you haven't hit the actual, see the stop is there and the entrance is anywhere in here. So I could short this and that's still valid. But the stop still belongs up here at like 83. It doesn't look super bearish anymore, but technically that's a valid short. It's also like the end of the day, which I try not to trade. I say try because sometimes I fail. Oh, we're right at the VPOC. I didn't see that on because I took off those signals. So if they can reclaim this, let's see if they can get a yellow box here. Because that would be underneath volume like this. See this? This guy got trapped. And then they released him. And so if this is a yellow bar, a yellow box, it's probably going lower. Let's see if I have that right. And like I said, it did technically trigger here. What does the 30 say now? Oh, interesting. They got a star up that got beat by a diamond. So they're getting aggressive to the short side there. He might get trapped. That's an aggressive move at the low. Interesting. This might just end up chopping around. How disappointing. All right, I'm gonna pack a quick bowl of sativa so I can stay up. I'm getting pretty tired. We'll go with, what do we want today? How about Chernobyl? And then I will do the review in 15 minutes. I may need to end the stream and start a new one. Because I know there's some people who are interested in the review, but like they're trading right now, so they don't really want to watch the live, but they're interested in the review. So it makes sense to start a new stream just for the review. But if that's the case, I'll give you the link would be in Twitter. Otherwise, you can just follow my YouTube and you will get notified of it. I'll think about it. We'll see how many people. If there's people in here, I'll just leave it running. But if it's relatively empty, I will start a new one. So we'll see. But yeah, let me know. Like I said, the chat should be open if you guys want to chat in there. Like you're not gonna distract me. I'm just rambling. And if you guys have questions, or if there's things that you specifically want me to cover, Like if you're curious, I don't know, whatever. Like since there's no one else asking, like here's your chance. Pretty sad P&L though. See if I can show you this without my. No, I can't. I don't know how to do it without putting my account number on there. Not like it really matters, but so it's because it's just an evaluation. Let me see here. Can I do it like this? Will this work? No, I don't think it will. I can't get it over there. There we go. See paper trading. See, so that's because I'm evaluating a 100K account, so I'm down $20. But that's all right. I definitely could have been down like 300 because we've actually taken 2 trades in the last hour that both would have stopped. One of them I executed poorly, and the other one I was able to finagle my way out for a small loss by adding to the position, which I should make very clear is a advanced technique that people shouldn't do until you've practiced it. Oh, that's a short. Fucking A.
Order filled.
Okay, I'm taking it. Stop goes up here. Fuck. Stop goes at 96. So I'm short. This, if it's short, these orange bars consistently create rollovers, especially if they're at or above the top channel. See, this one's not positioned correctly, and the fact that we put in this one and got above him, he might be trapped. In which case, he will cover here, and we're gonna get stopped. But assuming that the bears still have control, these can produce really big drops, just like this. Right. The one problem is that we're into the end of the day, and in 4 minutes we're gonna have MOC. So I'd like to be out of this within 4 minutes. I just want to get there. We go. So I got 10 points, and let's see if it can push it just a little bit further. They're right at that VPOC, the 2-hour VPOC. I want to see them reject back under that, and then we can get a flush, and I can exit all of it. I'll probably take it in 2 more parts. Fuck, get out of there. I'm gonna bail on it. That sucks. End of day. Now up $24. Whee! It was up $100 though. So with these Apex accounts, it's as if I lost $90. Because not really, but my trailing drawdown amount, like normally on this account, you can lose up to $3,000, like without, like if you lose $3,000 straight, right? No matter where you started, the account, you have to restart the account, and it's only $80 to restart the account, but still it's irritating. So because my high watermark for the day was like 104, my max loss on the account, rather than being $3,000 from the 100K that it started, it's now It's now $3,000 from 100,105 or whatever. So I can only lose $3,000 from my high watermark. And the goal of it is to make 6K without losing 3K straight, right? There's no daily loss limit. It's just, and so if you just size down when you're losing, you can manage it, but it's not easy. If anybody wants to do one of these, I have a coupon code for them. You can get 50% off. Here, I'll share it. If you want to try trading with someone else's money, which I highly recommend, you'll learn a lot. And with the 50% off coupon, it's not that bad. Here. So you can visit this. I think I can put this in YouTube without it yelling at me. So 50% off up to 10 accounts at a time per person, per IP address. So you can actually trade multiple accounts and like copy them with the Ninja Trade Copier. My coach, I think, has 5 running right now that are qualified, and each one is allowed to take 14 contracts or something. So he can like load the boat and take like 100 contracts, 140 contracts or something like that. It's crazy. And yeah, like all he pays is $80 per account just to keep it running. and like he can basically trade with like 500K of other people's money. It's pretty neat. You do have to pass the evaluation first. You should watch the videos and stuff. It's a little complicated. Once you get it, you'll realize it's actually an amazing deal. I've worked with a lot of different companies, and Apex has definitely been the easiest to work with. Yeah. Affordable. They actually pay out. Like, if you get a funded account and you make money and you ask for a withdrawal, you actually get money. And you keep like 90% of your profits. It's pretty good. Pretty good. By far the best one I've found. I do still trade in the cash account occasionally. Wow, look at that. Oh, that was MLC. I was like, what the fuck? So market on close must have been to the buy side. Right back into this resistance. That's what made this so good, is they tested above the resistance and then shifted volume lower. That was a good trade that I totally skipped because I did not want to get squozed. It's frustrating, but it's also frustrating missing that. But real life, if I would have shorted this took forever. This took a long time. Like 15 minutes to do this. I probably would have ended up taking most of my profits there. And then, yeah, I wouldn't have covered that. I probably would have covered, probably not that. Right here. I would have been out of it right here. So, realistically, my runners would have gone 05 to 85, let's say. 30 points. It's not, it looks like a lot, but like I said, most of my points would have been taken in here. And then I would have let runners go. And somewhere, certainly by 85, I would have been out. I'm not sure if I would have held through this. I don't know. I might have just exited when it bounced here. That actually makes a lot of sense. High or low, just get out. They retook the VPOC. They bounced right off that VPOC. Look at that. That's pretty. Did that get one of those blue squares that I just removed? No, it didn't. This one got a yellow square. And they got stuck, and then they rejected. I'll have to fuck with that a bit more. Let me see if it worked on ES. That signal seems to work well. On NQ, it was not making me happy. Yep, see the blue square? Blue square. ES is so much smoother. And the yellow square got stuck, so yellow followed by blue in a bullish or balanced market's going to give you a scalp higher. And then pretty much, as long as you don't think it's super bearish, reclaiming that VPOC like this is usually a good entry. I will keep practicing that. But this was blue, yellow, blue. This blue was just positioned funny, but and they got under it, and then they came back with another blue, and it was good. And here on NQ, if you had the signal on, it was blue way up here, got a little scalp, stopped out runners, then they said bearish, that went nowhere, stopped you out, and then ripped. So like I said, I'm not finding it works the same on NQ. I may be able to retool it, but the pattern is just totally different. So for now, it just stays on ES. I removed it from NQ because it cost me money today, so. All right, outside the TNP, so we're higher than the channel now. So if you're balanced or bearish, this is where you short. Of course, there's only 6 minutes left in the day, and you could still get squeezed. But if you're looking for an opportunity to short, this is probably the best one you get. Where's my dome? Oh, here it is. It's hiding. Let's see if it triggers. So an orange bar here would technically be short if it turns orange. It's literally the end of the day, and I'm up $24 on my Apex account, so I'm gonna not take it. But I could technically take it on my cash account, but how frustrating it would be to survive the whole day with $11 loss and then give away like $200. Like, part of me wants to like die fighting, right? But there's, yeah. I guess I could take it with super small size. Well, now it's gonna stop. Look at they barely even got, if you would have gotten, this is the problem at the end of the day. You get like auto entered way down there. They blip up here for like 2 seconds. Does it not stop out? Watch it work. Your stop goes up here, and the entry is anywhere in that bar. So anywhere above that can be an entry. It's still potentially a short entry. Let's see if it works. Like I said, at the end of the day, I'm not going to take it, but it's totally valid. Lower high, orange bar, not super bullish. The low looks shitty. So close. I would have gotten 10 points had I entered up here. It needs to get to 04, I think. 05, something like that. Wow, so close. 9 points. No way I would have held through this. No way. Not when it's pink like that. No way. I'd be out for like 5-point win. Run like a pussy. No way I could hold that. Not at the end of the day like this. No way. Right into opening range low too. But the location's good. The actual short is in a good location. So you can see that blue line that I said probably won't work because it hasn't before. That's the high of this period. So the 4 hours, right? That's it. It's literally right on it. So it goes to show what I know, right? Just because it hasn't worked doesn't mean it won't. It just might not hold for very long. It's still clearly a good spot to trade right here, that 23. Under 23, it appears to be bearish. So it's not what it's not a number it's not a level I had over the weekend, but it's something that developed, when was that? Developed when we started getting in here was it available back then? Where did this come from? I don't even remember. I think it was a long time ago. Yeah, it was the very first time we were in this range. Friday, September 30th. That level was available. I just didn't have it on my chart. That's when we started chopping in this range. We've moved above it and beyond it, or above it and below it, but it's, yeah, repeatedly. And of the three, of the volume area high, volume area low, and POC of that move back then, this here, this drop, that area has been our fulcrum where we've been bouncing, right? And the blue here, and the red here, and the blue here, that's the volume area and the POC. So you can see when we get above the volume area high, sellers show up, sellers show up, sellers show up. Get below the volume area low, sellers show up, sellers show up, sellers show up, sellers show up. Buyers held that one, buyers held that one, buyers held that one, sellers show up, sellers show up, sellers show up. Buyers hold. Ooh, they fucked you there good today. And then that's why I said I didn't know if I could trust it. And then sellers show up, right? The POC itself, test, reject, sellers show up. Test, reject, buyers show up. Test, reject, sellers show up, sellers show up. Buy right over it. Buyers try to hold it. Sellers show up, sellers block. and this one just traded right through it. So it's not like every single time it's going to work. But what I'm trying to show you is that if you have those levels identified as spots where if they reject it, your direction is probably determined by that. You don't just short the level, but you could say like, hey, if they get to here and I get a short signal on like an execution signal on an order flow level, and my stop can go out above that, like it's probably a good spot to risk off of. Wow, that would have worked beautifully, and I would have given it up for like 7 points. But like I said, end of the day, like I'm just not going to risk it. So this arrow here suggests that sellers are in control as long as we can hold it under this. As long as they continue to reject this, it's a seller's market. That's what that arrow says. If we get back up there, sellers need to defend, otherwise the buyers can take it. We're now under the VPOC again. See that? That dashed line is the 2-hour VPOC. It generally creates pretty choppy trading around the area, but if you can test on one side of it, test the other side of it, and then reject off of it, that's how NQ usually handles it. So it would be up, back, bounce. That's what you want to see. They did close over it with a star. Oh, there it is. Look at that. It's like literally exactly what I drew. Will it come back and bounce out of it? That'd be funny. But like here it is again. Got under it, get over it, test below it, break back through it. This is your entry. This would be very aggressive. Just like this would be very aggressive to short. Just because you rejected it once is not usually enough. On the higher time frame, what's happening, you can see is we are under it, over it, rejected it, tried to reject it, got back over it, tried to reject it, and they're trying to reject it right now. But see how we spent time above it here? And then they rejected when volume tried to rise, they rejected. So this going up, and then the sell signal going down with the yellow bar unable to hold above it, that's very bearish. So if you just look at the yellow line, see how it can't get above it? That's usually pretty bearish. They try to put price above it, they can't get the yellow line above it. They finally do it here, retest it and bounce, so that's your buy, is this candle. And where are you targeting? Back where volume got rejected, back up here. Gets you right here. Then they reject off that level. Where are they going? Probably this one. Because it worked before, so they're probably trying to get it back there. Now, if they can't get it back there, then it's bullish, and they bounce right off the yellow. I'm sorry, the blue. The yellow will bounce off the blue. See how now we're getting yellow above the blue? That's bullish. If they close it like that. See that? How we got under it, and then they reclaimed it? So now they just have to hold it. Buyers need to hold above this. On this time frame, we actually developed volume below it. And now we've gotten price above it, but we haven't gotten volume above it yet. It needs to close at 111.25. Otherwise, it's probably not going to hold. On ES, above it, below it, they have to hold this too. ES cannot get to 74.25. I don't know if they're going to do it, you guys. The buyers just aren't showing up. They're rejecting off of yesterday's volume area low. Not a good look. I really wanted to see buyers hold 74 today. That would have been productive. But the fact that they tested the voodoo range level above it and then rejected and went right through 74, that's not bullish at all. They have to hold this, like right now. Oh wow, it already closed. What the fuck? Why didn't I hear the bell? I was like zoned out. I missed the bell. This is all post-market. So we did close. Did we close? Let's see. Where did we actually close? Settlement hasn't happened yet, but close. Oh, 08. 08. Wow, they pulled it off. 08. How is that possible? That can't be right. Close. Oh, look, no, 88. 88. Oh, yeah, down here. They closed down here. Ooh, shitty. And now they're trying to retrace, but they're not going to have any volume because it's post-market. That looks bearish to me. They reclaimed it and then rejected and closed down here. Well, I'll tell you this much. If the buyers somehow pull this off and hold this low, I really doubt it's going to happen. Let's put it that way. I really doubt it. But if they somehow did, it could gap up because everybody sees what I see. But what I see is that this low is weak. This looks weak to me. There's lots of volume, but very neutral delta. They tried to come back and they rejected right off of it. Let's see that. See that? They couldn't get to this high volume node yet. Right where this low volume area started is where they rejected. And now they're trying to hold that. I don't think it's going to happen. They've rejected the 2-hour VPOC pretty clearly, and they closed the day down here. Now there might be like earnings or something, and maybe earnings will change this. And it does look like one of those setups where it's so obviously bearish right at the line in the sand. Because think about it, if this traded just a little bit higher before close and closed up here, above yesterday's POC, above the midpoint, the voodoo range level that we seem to be orbiting around, right? We're like going back and forth around 74. See that? If we can close back above that, well, then we're still balanced. It's not so bearish. But the fact that we closed the day way down here, below yesterday's value area, that should have been easily moved through, which it was. And then we came back and we rejected off of it. That looks bearish, right? So the best trade opportunities would be if they had earnings overnight that pushed us back above this area. This should be traded through easily, and we'll open the day up here. Okay, that's best. That's your most exciting opportunity. Is since it looks so bearish at close, if they push it all the way back up, it could open up here. The most likely thing that's going to happen, that's like unlikely, right? They would need some sort of a news-driven gap. If, on the other hand, we get the market stays where it is overnight and we open below 74 or lower, this low is definitely going to get taken out. And while this one looked pretty secure back then, we got so close to it that it's going to be hard to hold that. So more likely, we're probably going to bounce in 11,000 is probably going to get tested, right? That makes a lot of sense. And then whether or not we bounce before 10,960, I'm not sure. Because if it's got a lot of momentum, it won't. It'll come down to 10,869.50, if not lower, because there's just not a lot down there. See this? There's just nothing there. This level is old. The market has memory, though. You might remember. But really what we should expect is that this gets renegotiated. And maybe even 10,776.75. Right? That's the expectation. But like I said, the best trade opportunity, because it's an unlikely scenario,
Here are some results.
would be to go to gap higher than 74, because this yesterday's value area should be really easy to trade through like it was today. Should move easily. So if we can get a gap, the move up could be explosive. Right? On ES, it's probably pretty much the same picture. Let's check. Yeah, on ES, we were consolidating inside of these, and then we started getting a expanding negotiation where we go above and then reject, take out a high, and take out a low. That was today. Those are generally pretty hard days to trade. Considering that it was a difficult day, where you broke the high and the low of yesterday, I'm glad I didn't lose a lot. They're usually pretty tough. You have to be really selective with where you're trading for those to work, because you get a lot of straight up, straight down. And you have to be able to hold your runners even though it's not a trend day. It's probably the hardest phase there is to trade. But as far as what they developed, yesterday's drop down, not the whole day, but that drop down, the POC of that drop was about 3,700, and that's where we've been orbiting around. See that? It's orbiting around that. So if you wanted to target a retrace, you'd take most of your profits into 3,700. And then we shouldn't expect 37.1550. If it continues to orbit like this, what we're going to get is higher highs or lower lows, right? It's not just going to stay in here. But what could definitely happen is coming up to 3,700 and rejecting. So if we can't get to 37.15, it's not bullish. It's actually just a retrace that's going to go lower. Whereas if 37.15 gets taken, we're probably going to take out this high. So that becomes a really important spot, because this value area should be easy to travel through. See that? If it's still bullish or bearish, or bullish or balanced, that continues to be easy to trade through. When it stops being easy to trade through, like when you get stuck there, like they did right here, that's a sign that it's bearish. What would we need to see to think it's not bearish? Well, we need to reject below anything below 36.82. So if 36.82 can be, or 36, let's say 36.86, because that's actually the voodoo range level above that. So if we can get like a gap up here, and then we start developing volume up here, this should once again be easy to travel through, you'd think. Whereas if it's just like an impulse move up that rolls over, that's big problems for buyers. But like I said, for now, it looks like we have problems for buyers, because we've got all these single prints down here that need to be tested. And real support is actually lower than this. So with OPEX coming, like I said, unless they can get a gap tonight, which would change things dramatically, I imagine what they're going to do is they're going to come back here and test this area and then roll over, attacking actual support, 36.10, if I had to guess. Okay, so I'm gonna, unless there's questions, I'm gonna close this one, get something to eat, come back and do the review in about 10 minutes. All right, so there'll be a new link to the review, so that those who watch later on YouTube don't have to watch 2 hours of attempted live trading to be able to see the review. And in the review, I'm gonna look over what we saw when we opened today, and then see what the algo told us to do and whether or not it worked. And then I'll also review some of the places that I made mistakes and see if I can find some solutions to that, maybe through some back testing. So I will be back in maybe 10-15 minutes, all right? Thank you so much.